when we're breaking out of consolidation. So this is basically called breakouts, like when price breaks consolidation, that's what we're going to talk about right now. So when price is consolidating, there are two things that can happen, right? Two things. Price can break without a retest to, let's say, price breaks up without a retest to create a high, or it breaks the low to create a low, right? Or what can happen is the price can continue in momentum without a retest. Now, how many times have we seen price break consolidation and not do a retest? A lot of times, man. Bare times we've seen that. Price just breaks it, just continues on, and everyone's like, man, like, will it going to do a retest? Should I sell now? Will it do a retest? Will it come up? Like, what the hell's happening? I've been waiting so many hours for this to happen, and it breaks and doesn't even do a retest. Like, what the hell? So that's what we're going to talk about, how to identify that. No, now, at times it's okay to enter an impulse entry as price is breaking a low or the high of a candle to break up or down respectively, right? What this basically means is that when you have a candle closing like this, right? You have a candle closing like this. And let's say this candle is closing above a resistance, right? Now, sometimes what's going to happen is that, let me just bring this up over here, right? So let's say this candle is closing above resistance. So this candle, what we're going to call it, we're going to call it the breakout candle. So now sometimes what's going to happen is that the next candle, it may kind of come down, make like a minor support, and then continue to go up. But sometimes, man, the next candle, it may form like this. It may just go all the way up, and you're just like, whoa, what happened over here? Like this candle just came out of nowhere and went up. So now you got to see that, okay, how could I have entered this candle? How could I have taken this trade? So that's what we call an impulse entry. This is something I didn't want to include, but I'm including it in this webinar because, we have a very nice turnout here, 400 people here. So now this is an example of an impulse entry. Impulse entries are when you're not waiting for a retest. It's an advanced concept. So at times it's okay to enter At times, it's okay to enter an impulse entry as price is breaking the high of the previous candle, right? So this is the previous candle, and this is the high of this previous candle. Impulse entry is when this new candle is breaking the high of the previous candle. Now, we're going to go back mentally to the part where we were talking about uptrends. If you remember, we were talking about how candles are making higher highs and higher lows, right? So during an impulse entry, if this candle is breaking the high of the previous candle, there's a very high chance it will continue moving up, respecting the low of the previous candle. Does that make sense? I think it's going to make much more sense after you watch it over and over again. So I said that's what an impulse entry is. Impulse entries are very risky entries. Also write this one other thing down, that if, let's say this is the 30-minute candle, and if the candle breaks the high in the first half, I've seen price come back down. If a candle breaks the high in the second half of the candle, then there's a very high chance it's going to continue moving in that way. Because let's say you have a 1-hour candle starting, right? You have a 1-hour candle that starts bullish. And now when the next 1-hour candle breaks the high of the previous 1-hour candle in the first 5 minutes, it will mostly all the time come back down. That has happened to me. I've seen a candle close bullish, and when the next candle starts breaking the high in the first 5-10 minutes, I take a buy, and that always comes down. And I'm like, man, shit, it's coming back down now. But if the candle breaks the high in the second part of the candle, then I'm like, okay, you know what? It did what it had to do, like down over here, make a small wick or whatever it had to do. And now if it's breaking the high, I think this is a better opportunity for me to take a buy and take an impulse entry to continue going up. And now when you're taking impulse entries, let's talk about stop losses, right? Because you can't talk about a trade when you don't talk about a stop loss. So this was the impulse entry candle right over here. If you're taking an impulse entry, which is going to be right over here, a conservative stop loss is going to be below the previous candle, right? But an aggressive stop loss is going to be below the current candle. This makes sense? Because the reason you're putting an aggressive stop below the current candle is because you're anticipating. So now if we have broken the high, it should continue moving up. It should have no business coming back down to break its own low. And from what I've seen is that it won't break its own low if this is the second part of the candle moving up. Like if in the first 5 minutes it's breaking the high, then it can come down to break the low and make a lower wick and whatnot, so just being safe at that point. So let's come back to consolidation. Got a little sidetrack over there, man. When I start talking about some other topics, I just start going deep into it. All right, so we know this can only be done when there is enough volume in the market and pairs really well. Okay, at times it's okay to enter impulse entry as price is breaking the low or the high of the candle to break up or down. We know this. Okay, so this can only be done when there is volume in the market, when price is really volatile. So let's say price is ranging here, right? Price is ranging here. We have this candle closing above. We have this candle closing above all these candles here to the left. Right, so someone can say, okay, since it's closing at resistance, but it's also closing above all these candles here to the left. This means this candle is doing something which the previous candles couldn't do. This means that this is now a candle which may move the next candles going up to. So someone who's being risky, they'll say, okay, well, since this candle is breaking above all these candles here to the left, maybe this is going to be a breakout candle, right? This is what a breakout candle is, when a candle closes above or below all the other candles to the left. So this is a breakout candle, and someone can say, okay, well, if I'm being risky, I want to take a trade as the next candle starts, and my stop is going to be down over here, right? Now, if this is a 30-minute time frame or a 1-hour time frame, having a stop down over here, I think this is going to be a bigger stop loss. But if you're taking a risky entry, then your stop has to be, below the breakout candle. Because if you're taking a buy, you want price to make higher highs and higher lows. And what that will mean is that the candles will also make higher highs and higher lows, which means the next candle should not break the low of the previous candle and continue moving up. So if you see what happens, the next candle starts to move up. So now you've taken a trade without a retest. This is like sometimes there will be no retest. So you start to kind of like solve this idea that, okay, if there was no retest, how would I have taken a trade? What could I have seen in the chart that would have told me that, okay, you know what, Raja, or you know what, Mr. Forrester, maybe this is the time where I could have taken a trade. So you start to see these things. So let's see what happens here next time. Okay, perfect. Yeah, we start to move up. Breaking out. So next, we have when we're forming a support and prices breaking up from a resistance. You have a candle that's closing bullish at support. You can't take a buy because there's a resistance right over here. You can't take a sell because we're at support and the candle is not closing bearish, it's closing bullish, right? So let's take a look at the next candle here. So next candle closes like this. Next candle closes at support. It kind of closes below the previous candle, but it doesn't really close below the previous candle, right? Like it's at that support. You're not sure right now what's happening. You're kind of like undecided what's going on, and then you wait for the next candle, and next candle kind of like moves down. And when the next candle moves down, now we have a lot of smart people in here, and what they might say is that, oh, wait a minute, man, we're breaking below the support. This could be a fake out, and price may start to come back up again. And I think that idea is very wrong. Now you're talking yourself out of trades because a fake out is not going to be a fake out until it happens. I mean, if you don't have candle closing back in the range, then there's no fake out, right? So you have to wait. You have to wait. So while you're waiting, you're like, okay, perfect. This candle is closing like this, and the next candle is just going, and I'm not in this trade. Oh man, now what should I do? So now let's take a look at this, for example. Now we had consolidation, and now we had continuation moving down. So now since the candles are moving down, we're not looking at any indicators. We're not looking at any magic stuff here in the charts or taking any stuff to make us see clearly, whatever. So now we have to identify that, okay, how could you have executed this trade? So let's go back here now. You had candle closing below support. Now, if someone is looking at this, they're looking at this in two ways, right? One way is this, okay, what if price breaks down and doesn't do a retest? Okay, doesn't do a retest. What if price breaks down and does a retest, right? So you know how to enter when price does a retest, right? Price is going to come down, come up, create like a bullish candle, then it will create like a bearish candle. That will be a confirmation to take a sell. You're like, okay, perfect. We got a retest. We got confirmation. We'll take a sell. Have a good day. Awesome trade. What if there's no retest? When there's no retest, now you start looking at impulsive trades. Now you start to look at that, okay, I might want to enter when the next candle breaks the low of this candle. Maybe that's going to be a good entry for me now. So when we wait for the next candle breaks the low and you automatically enter a trade, and then now you're executed a trade, and now you have to identify your stop loss. If this is a 30-minute time frame or 1 hour time frame, you're going to place a stop loss above the candle that's breaking out now. Now someone might say, I know this question is probably running in someone's heads, and they might be saying that, can we use a sell stop? Yeah, you can use a sell stop. But sometimes, like your sell stops, they may get activated a little too early. So it's better to use market execution. As prices break because let's say if you're using a sell stop, right? You're using a sell stop below this candle, and what if price breaks the low in the first 2 minutes and start to pull up a little bit? Then what? Now you're in a very early position. So you want to wait for price to break the low. During the second half of the candle, or I'd say during the second half of the candle, you want to take an impulsive trade for to be very confident that it will now not break the high and it will continue making a lower low and continue moving down. The reason why we're emphasizing on candles themselves is because picture this, right? Every candle that's moving, it's moving billions and billions of dollars. Billions of dollars are being moved, man. If you count from 1 to 1 billion, it's going to take you 33 years to count from 1 to 1 billion. That's 1 billion is a lot. So every candle moved is billions of dollars. And as retail traders, we don't know where banks trade. We don't know where institutions trade. All we know is candles. And if you can correctly identify where the next candle is going to go, man, that's your trade right there. If you can identify the 30-minute candle, the 1 hour candle, if you're looking at a pair like GJ or GU or GA, a 30-minute or a 1 hour candle is average about 20 pips, 25 pips, and that's your trade right there, man. 20, 25 pips, you leave a runner running, 10% of the time that runner is going to go to 100 pips. And you can post that to social media and everyone's going to say, oh, wow, you're a genius, right? But most times it's going to get stopped out. Happens to me too, man. This past week, I've taken maybe 4 small losses, and all those 4 small losses were just my positions getting stopped out because they didn't really run. And the one which did ran, they ran a lot. And that was a very, very small minority. So always look to see how you can catch candles. That's why I'm only focusing on candles here, right? So this was a little bit on impulse entries here. Now, positions in retests, right? We've talked about uptrends. Now, I'm sure by this point, I want to know by show of hands that the basic idea of an uptrend and a downtrend with regards to candles is solid, right? Solid? We're all solid? Hands up? Yeah, everyone hands up? Cam? Yeah? Okay, perfect. Hands up. It's all solid. Now we're going to talk about positions in retests. Once price breaks a consolidation, it's going to either continue moving on or it's going to do a retest. So we're going to talk about retests here. When price breaks out, it will either continue running or it will come to do a retest. If you have taken an impulse entry, then the retest will give you an opportunity to execute another position, right? Now, let's say we have a support forming right over here, right? You have a support forming here, and now you're looking to see that, okay, we're ranging, and now we want to wait for candle to kind of maybe do impulsive trade or whatever, right? So you have a candle forming like this. Now, someone might say, okay, you know what, man? If I take a sell here and if I have a stop up over here, maybe this is going to be a very big stop loss. So I'm going to wait. So I'm going to wait for an impulse entry. I'm going to wait for the next candle to break this low and then I'm going to take a sell. Someone might say that. And let's say we go off of that idea. I mean, that someone might be me, taking those trades. So the next candle breaks the low, you take a sell, you take an impulse entry, and now your stop is above this previous candle. You're like, okay, perfect. We're in a sell, and price is moving down. You're like, oh, nice. We have a high volume now. You have candle making a bigger body. Bigger body candle means there's a lot of volume now. You're like, okay, perfect. You know what? This makes sense now. We're moving up. We're moving down. I have a stop right over here. So let's say your stop is above this candle. Your entry is right over here. You have this candle forming bearish. At this stage, once you have a candle forming bearish, a lot of people are going to look at this and say, man, this is going to keep running to the ground. I think new traders mostly say that. So once you say that, you have to say, okay, you know what? I caught a 30-minute candle. Now the reason why you might say this will continue running to the ground is maybe if you're using lower risk, right? You're using a test position. A test position is a 0.01 lot, you're using, and the monetary gain from a 0.01 lot is not enough to satisfy you. That's why you're thinking it's going to continue running to the ground. But the fact of the matter is, if you're following your plan, if you have $1,000 account and you're using a 25-cent lot, and if this move down is 15 pips, man, you've made $30. Right? You've printed $30. Prices move down. Now you want to secure some profits and you want to leave a runner running because you've caught one 30-minute candle moving down. Next candle moves further down. Now you've caught even more profits. So now at this stage, what you want to do is if you want to wait for a retracement to add another position, maybe you want to keep your stops at break even, right? But if you don't want to add more positions, and if you want to trail your positions down, maybe now you're moving your stop below this candle. Once you have this candle closing bearish, you're moving your stop below this candle, right? So you're securing as price moves down, and you're moving your stops above the highs of the previous candles because now price is trending down. So the only way this downtrend is going to be broken if you have a candle breaking the high of the previous candle, which, okay, this doesn't really breaks the high, but this one essentially breaks the high. So now if you were trailing your stop, you're out of the trade. But if you had a runner running from up over here, you're still in the trade, because, you have a runner running and it's basically you're still in the trade. And now you have a little bit of pullback and now you have a candle closing like this. So sometimes you may not get a full retest right at this support. Sometimes you may get a retest somewhere below a support. And the same way, sometimes you may get a retest where candle wicks all the way inside, comes back down and closes right here and then starts to go down. That may also happen. There are like unlimited scenarios that may happen. But as traders, we're waiting for price to close in our direction for retests. So basically, now you have a candle that's closing bearish right over here. And now you're like, okay, well, perfect. Candles closing bearish. Maybe at this stage, I want to bring my stop loss from my entry above the previous high which is being made. And now I can maybe enter another position, keeping the stop loss right over here and anticipate the next candle to go down. That's all we can do. We can only anticipate for the next candle to go down. We can't control the outcome. We don't know where it's going to go. We're just anticipating, speculating based on what we've seen before. The only thing we're controlling is risk. That's it. If price comes up, how much are you losing? That's the only thing you know. You don't know where the next candle is going to go. Next candle goes down based on what we've learned. So you're like, okay, perfect. Runner is running. So awesome. The same thing is going to be true when you're looking for price when it's moving bullish. It's the same thing that's going to be true in that sense too. Okay. So let's move on. So we've talked about impulse entries. I know we haven't talked about them in great detail. I mean, we're gonna leave that for some other time. We've talked about, entering when candles are breaking lows, when candles are doing retests, uptrends, downtrends, consolidating, adding positions in uptrends and downtrends. Most of these things are going to be solidified in your head when you see them happen over and over and over and over again. You're going to get really good at this once you really start focusing on just candles, man. Seriously, just candles. All right, let's take a look at the next section here. We have conditions for adding positions, right? What are the conditions? Now, these conditions are not really, I mean, they're not set in stone. It's based on, like, what I've seen people do and things of that nature. So let's go over them. So the first condition is if price is moving bullish and if you are already in a buy, to add another position, you have to make sure there's enough range for price to continue up. Let's say if you're already in a buy and you're about to add a second position, you need to make sure that there's enough room for price to keep on moving up. From that, what I mean is, like, let's say if you have a support down here and candles are moving up, you take a buy right over here and price moves up bullish. And now when price starts to come down and creates the support, and now if you want to add another position at this time, you have to make sure that there's enough range here to the left. Then you can say, okay, like, what? We're bouncing off of a stronger support. There's volume in the market. I'm anticipating price to break this minor resistance and continue going up. Then you can say, okay, perfect. Like, what? The next candle breaks it and starts to move up now because you have all this range here to the left-hand side. But if you have a small range, let's say if you don't have enough range, let's say your range is till like only up over here, right? Then adding positions, it kind of becomes a little bit risky because you don't have enough range, so you need to have enough room for price to move up when you're looking left. So we're gonna go over these examples here as well. So the first condition is knowing that there's enough range on the chart for price to move up for your second position to work out. And man, sometimes you don't get an opportunity to add another one as well, and that's just how it is. Those things happen. When those things happen, you have to look at that and say, okay, how could I have added another position? That's very important. So the second thing is when adding a position, make sure the first position is always at break even to minimize risk. Never ever leave the first position open. Leaving it open means that leaving it open to risk. You always have to make sure that it's at break even. Because when you're in profits, you're only looking for two outcomes when you're in profits. The first outcome you're looking for is obviously closing in profits. The second outcome you're looking for is closing at break even, right? And the third outcome is that's not something that we're looking for, closing in a drawdown. I mean, we just have to forget about that. Excuse me. Haven't eaten anything and still getting little, whatever. Let's take a look at the next chart here. Okay, so when starting out, always use 50% reduced position from the original, right? Let's say your original position was, let's say, like a one lot, or if it was like, two lots, and now you're adding another one, you have to make sure that you're using lower risk. You're reducing the risk on the second position because ultimately, man, you're still adding risk. So you want to make sure whenever you're adding another position, you're always reducing risk. You're always reducing the downside. You're controlling your downside all the time. All right, always understand when there's volume in the market. This goes to the first slide we saw, which was the slide when there were times in the market when there's volume in the market. You always need to know when there's volume in the market. Whenever you have volume in the market, you know for a fact that, okay, now price has the ability to continue moving where I want it to move whenever you have volume in the market. So these are 4 conditions we need to know whenever we're trying to add positions. All right, my favorite part, chart examples. This is where we open up the floor here. We open up the chat and really like kind of see like where everyone's understanding is once we're looking at the charts, right? So let's say we're looking at this chart right now. What do we see right here? Do we see ranging or a trend? Do we see a trend or a range? We see range. Okay, perfect, perfect. We see a range. All right. Now, now what do we see? Is this a good opportunity to take a buy, or are we just going to like kind of like wait here a little bit? It's a breakout, right? It's a breakout, but can we take a, oh, someone is saying we can take buys over here. Okay, so if you do take buys, I think the stop loss is probably going to be down over here if we do take buys, right? We have around 380 people in here, so I think your stop loss could be way down over here if you do take buys. So now let's see what the next candle does right here. Next candle closes bearish, right? Now the next candle is closing bearish, and it's closing above a resistance right over here. Some people are saying it's a retest. Some people are saying wait for the next candle to break the high, because now essentially if this is the 30-minute time frame, man, you have a candle closing bearish on a 30-minute time frame. This does not indicate price is going up. Even though the candle is closing above a support, I don't think this candle means it's going to go up. The only way, okay, what will make this candle go up? Let me ask this. What will make the next candle go up? Break above the bearish candle. Someone is saying volume, someone is saying break of the high. So the correct answer is going to be once it breaks the high, then you can possibly take an impulse entry to go up. But like when we had this candle closed bullish, we will say, okay, perfect, we can take a buy. Now our stop loss is down over here and we're in a buy. So now since this candle has closed bearish, at this time you may want to get rid of some of the trade. Because the 30-minute candle has closed bearish. And what we've learned is that when a 30-minute or the 1-hour candle is closing bearish while you're in buys, there's a very high chance the next candle can continue moving down, right? So we're going to wait. So we're going to wait to see what happens now with the next candle. Okay, the next candle comes back down. The next candle tries to break the high and then it comes back down. So now people who are a little bit advanced here, someone will say, okay, fake out. Someone says fake out here. This is an excellent case of a fake out. A fake out, for someone who doesn't know, is basically, now let me just explain this here. Price will only move up continuously, or it will only move down continuously, right? Or it will consolidate. When price is consolidating, and if it tries to move up, and if it comes down to retest to continue move up, if it can't move up, it will go back in the range, right? It will come back in the range, it will try to consolidate, and almost all the time it will break the opposite way. The reason why is because, like price ranged here, let's say on the 30-minute time frame, and price broke up to continue up, but it couldn't break up. It came back in the range. If price couldn't break up, where else will it break to? There's a very high chance it may try to break down, because price always move up or it moves down. Imagine if price moved sideways, and diagonally and up and down and top to bottom, and it moved in all these directions, man, no one would be able to make money. We're all going to be fucked because we wouldn't be able to make any money here, man, because price is moving 30 degrees to the northeast. Like, man, what the hell is that? I only want to know if price is going to move up or it's going to move down. That's it. That's all we want to know, right? So price did a fake out. It tried to move up. It couldn't move back up. So obviously there's going to be a higher chance for price to move down. So let me just draw this support back here again, right over here, right? And let's look at the next candle. Next candle breaks down right over here, right? So now, by answering only 2 words or just 1 word, what's the probability that price will move down? it's a very high probability the price will move down, right? So obviously, like, sometimes we don't really get a entry over here, but we just kind of like estimate the price is going to go down, and we look at the next one, price starts to move down, and price starts to move down even higher now, right? So now we have to look at this and say that, okay, since we missed this move, right? Since we missed this move, what would have been the perfect entry for this trade? And if we go back now, I think once price broke the high over here, right? Broke the high over here. Some people took buys, took up. Price formed a bearish candle. So when 30-minute candle closed bearish, at this point we basically closed the trade. We're like, okay, you know what? We're going to wait for price to break the high. And then this candle formed, this wick kind of like wicked above the candle. And I'm going to assume that it wicked above the previous candle in the first 5 or 10 minutes, right? That's what I'm going to assume. Then the first 5-10 minutes it wicked above, and we're like, okay, you know what, it's too early to break the high, so we're just going to wait for the second half of the candle, right? And when this candle closed back in the range, it basically made a high right over here, right? And it closed back in the range. So now we're like, okay, it made a high and it closed back in the range. Maybe if we wait for the next candle to kind of like do a retest of this resistance, because basically what you have over here is all right, let me just bring my arrow back here. So you have resistance, 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 resistance. You have candle with no wick, resistance, breakout, and this candle closing back under resistance. So if you look at the next candle kind of like did a retest of this resistance, and then it started to go down, right? So here's the idea now. Now, if you're looking at this setup, right, and if you're only looking at this information here, I'm assuming that you're already looking at this move up as a fake out. And we have some experienced traders here in this meeting here. You're already looking to say this as, okay, like, you know what, it will now continue moving down. Someone is asking, it's almost like a bear flag forming with consolidation. Listen, this is why I put the chat off, because, you got things like these, like the only thing I'm talking about here is the only thing I'm not talking about your bear flags or pennants or Fibonacci's or, man, how long have you been trading flags and pennants and you've been losing? For how long? How long has it been happening? This is something very simple, concise. No, man, listen, you need to leave the meeting right now. Whoever's talking about these pennants and flags, you can stop. So, okay. So now, if you're an experienced trader, you're looking at the candle forming like this, you're already making up your mind that, okay, price will now start moving down. Actually, you know what I'm going to do? I'm going to close the chat here. Perfect. I don't get distracted. The gulag. All right. So you've already made up your mind that price will break support. Now, this example is an advanced example, so that's why I'm talking like that, right? So basically, when next candle forms a bearish candle, you're basically anticipating this candle to respect the high of the previous candle, right? So this is going to be an impulse entry as this candle is moving up. You're saying, okay, you know what? Since it's a fake out, there's a higher chance for price to break support and continue down. I may be okay by taking a sell right over here and having the stop loss above the previous candle, anticipating it to continue moving down. It breaks the support, you're already in the trade, and now you can continue to trade moving further down. So that's how fake out works. A fake out, you're anticipating moves happening. Whenever you're looking at the candles, in your mind, you're already printing the candles the way you want them to move. But at the same time, you already understand what your loss is going to be, what you're putting at risk, right? So this was a little bit of an advanced concept here. So let's go off to the next example here now. Let's take a look at the next example. All right. So we have candles kind of like forming like this, right? So from the get-go, what we see is that we see clean move happening here, right? We had a clean candle moving up. So when you have clean candles moving up, there's a very high chance that the next candle will continue moving down. We all can agree to that the next candle will continue to move down. And if we have a, let's say, we have a resistance forming right over here now, right? And we have a major support down over here, right? So now this is an enough range for price to come back down. So I'm going to open up the chat here again because I think this was fun. Now, now, what's the probability of price going up, back up? What's the probability of price going back up? It's very low, right? It's very low. It's not zero, but it's very low. The probability of price moving down is extremely high from what we see right over here. And if we see price is going to move down, that means price is going to move in a downtrend, right? So if price is going to move in a downtrend, what do we want candles to do? We want candles to make lower lows and lower highs. So for someone who's watched price making lower lows and lower highs, they might look at this and say, okay, you know what? Maybe I want to enter a position and keeping my stop above the previous candle, anticipating the next candles to continue making lower highs and lower lows, only because we have enough range to go down and we have all this clean traffic that went up. So then there's a high chance price will, mirror this move and come down. That's it. That's all what we're looking at. So let's see what happens with the next candle here. Next candle, forms like this, right? Next candle forms like this. So now what you have here is that you have an entry which is right over here, right? Okay, so this example now turned very interesting now, right? You have a candle closing bullish. So now basically you have an entry down over here on this candle and your stop is right up over here, right? So now at this point, someone said that we will close 50% of the position. So now since you're already in a trade and the 30-minute candle is closing bullish like this. Now, since what you've learned is that, okay, well, if the 30-minute candle is closing bullish, there's a very high chance the next candle can also continue going bullish, right? But you're already in a trade. You've already made up your mind that price will continue moving down. So when you're faced with a situation like this, instead of keeping the entire position open and keeping your entire risk open, it's a really good idea to reduce the risk. Right? Because now candles close bullish, you know that if the 30-minute or the 1 hour candle closing bullish, there's a very high chance for the next candle to go up. So you want to reduce risk. That's how you ultimately reduce your losses. You keep your losses small. Is that now you're keeping risk away. Maybe let's say if you had a 1 lot open, you might want to close 0.5 lot. Now if price hits your stop loss, you're not going to lose, let's say your original loss was $100. If price hits the stop loss, you're not going to lose $100. Maybe you're going to lose $50. Right? So now, let's see now. Now, at the same time, if you're in a sell, you're also saying that, okay, if we're in a sell, how do I want to add another position if price starts to break the low? If the next candle starts breaking the low of this bullish candle, then at that time you can say that, okay, maybe at this point we can add an impulse entry to the trade. Makes sense? If we have the next candle kind of like breaking the low, at this point you can add an impulse entry saying that, okay, well, all of our confirmations here to the left, they make sense and we may continue to move down. So let's see what the next candle does here. Next candle starts to go bearish. And that's where you enter an impulse entry. That's where impulse entries are really important because you're adding impulse entries with confirmations that the lows are now getting broken. At the same time, if you look at this fact here, that we had a big bearish candle. We had a smaller bearish candle, but when this bullish candle closed, it closed with a small body. So that's why once this candle broke, you added a second entry, impulse entry, and now you have a trade running which may end up heading down. Makes sense? So yeah, and it started to move down here, came down to support. And then it started to move up. Okay, perfect. So if we go back, here, let's just rewind this example here a little bit. Right? So if we go back here, okay, so you had this candle forming bearish, right? This candle forming bearish, and you looked at that and said, okay, you know what? There's a very high chance for the next candle to go down, so I'm going to take a sell. So you took a sell right over here. Your stop was right up over here. The next candle forms like a small bullish candle and you're still in a trade, you've reduced your loss over here. And now you're thinking that, okay, because you're always thinking, what are you going to do when the next candle forms? What are you going to do, right? So at this stage, what you're thinking that, okay, I've closed 50%. If the next candle starts to go up, I can now I'm going to lose less what I anticipated to lose, right? At the same time, you're thinking, if the next candle starts breaking the low over here, maybe I can add another position. That's what you're thinking. Now I can add another one. So price breaks the low, you add another position, and now it starts to go down. So now when the next candle forms, maybe you can add a third one too. Because now when you can add a third one, you can maybe add a third one maybe right over here or at the retracement of the next candle and keep the stop right above over here. So now you bring your stops down as well. You're trailing your stop losses because your target is right down here to the left-hand side, and next candle kind of like wicks up and continues to go down. Right? So you're really looking at where the candles are forming, how the candles are breaking the lows, and all that stuff. We're not looking at any morning stars or star trek, star patterns, nothing. We're just looking at simple candles as they're breaking the lows, as they're breaking the highs, and that's it. Very simple stuff by reading candles. Man, if you can't read candles, you can't trade. That's just what it is, man. Like if you look at the chart all zoomed out and you have your EMAs planned and fibs planned and they're not working, you're applying more indicators, man, rocket science. Can't do that. All right, let's take a look at the next example here. Okay, price then continued to move down. Oh, okay. Let's talk about candles with no wicks, right? Let's just talk about that because I get a lot of questions. So since we're looking at the candles, we'll talk about the candles with no wicks here too. All right. So basically, when you have a candle with, let's say, no wick at the bottom. Okay, or leave that. Let's say we have this candle here and it has a wick at the bottom, right? It has a wick at the bottom. So whenever a candle has a wick at the bottom, you're mostly saying that, okay, since the candle has a wick at the bottom, this means that the next candle has the ability to now come down to fill this wick, right? So like, okay, perfect. Next candle can come down to fill this wick because the candle has now left a range for the next candle to fill. But if a candle has no wick at the bottom, just like right over here, this means there's no range for the next candle to go down. There's no range at all. So like wicks are basically breadcrumbs the candle is leaving for the next candle to follow. Right? So if a candle has no wick at the bottom, this means there's no range, then there's a higher probability that the next candle will go the opposite way. There's a 50-50 chance, Like if you look right over here, this candle had no wick at the bottom and the next candle still went down, right? But if you look right over here, this candle, this candle had no wick at the bottom and I mean, like this candle had no wick at the bottom and next candle kind of like went down, even though this was a big volume candle coming down. But once you have a candle that kind of like forms like this with no wick at the top, this means this candle couldn't even move up a little bit. It couldn't even move up a little bit. It just moved straight down, which means there's higher bearish momentum. Same thing right over here. This big bullish candle, it didn't even move down, not even a tiny bit. It just moved straight up, like straight bullish momentum. So, something about like, candles with no wicks. You can just look at the charts and do some back testing. All right, let's go to the next example here and ta-da. Oh, okay, let's go to the next one. All right, this is what's happening right over here. We have a support formed. We kind of have like a resistance form right over here, and we have some sort of an issue maybe over here somewhere, some sort of a weird issue happening here, and it's just there's basically if price is going to go up, there's not enough range to go up, right? So we're probably going to have to wait for this area to break over here. So let's see what happens here now. Okay, so next candle goes up, goes bullish. Next candle kind of comes down. So at this stage, it seems like we're creating what? A range. We're creating like a consolidation because like this candle went bullish, it went at resistance. We can't buy because we're under resistance. We can't sell because candle is bullish. Next candle closed bearish. We can't sell because now it's maybe respecting this minor support over here. We can't buy because candle is bearish, right? Now we wait for the next candle. Wait for next candle. Next candle forms bearish, right? But now since it was going bearish, I know some people would take sells right over here because there was a time when this candle was something like this. When a candle is something like this, man, your brain goes in overdrive. You're like, oh man, this is going to go down. We're going to take a sell before the candle even closes, right? And then once the candle closes, you have an entry right down over here, and price has now closed above support. And now you're in a drawdown. You're like, okay, man, you know what? I'm going to keep my stop loss and I'm in a drawdown, but I think it's going to continue down because Raja said, oh, the 30-minute candle, respect that. But Raja also said that it's closing above support. So you need candle to close below support. So look at the next candle goes up, comes down. See what I mean? Now this is basically ranging now. Look at this next candle. This candle also bullish, below the support, just ranging. Next candle bearish, you can't take no trades. If you're looking at this in a live market, man, you're looking at every candle moving up, moving down, moving up. You're not waiting for the candle to close. You're taking buys, you're taking sells, you're taking buys and sells, and by the time you're done, you're just like exhausted. And then once you're exhausted right over here, once you're already down 30%, 40%, you've used all your confidence in the losing trades. You've lost all your ego. You've lost all your will to actually look for concrete setups. And then you have a candle closing like this below support, right? So now, don't you think this is a much better confirmation? Right? Don't you think that we've actually formed support here with the previous 1, 2, 3, 4, 5 candles, and this candle has now closed below support? I personally think this is a much better confirmation for a trade. If it's not a buy, I mean, it looks really good for a sell because now you have clean candle here looking left. Right? So now, if someone was to take a trade, they might say, okay, well, what we talked about was, if you remember what we talked about in the previous slide was about candle breaking out of a consolidation, right? This is the breaking out of a consolidation. So when you look at this, you're like, okay, what's the probability it's going to go down? The probability of it going down is really high because, this candle broke below the previous candles. Right? So now if you're going to take a sell over here, maybe your stop is going to be above this candle. Right? So let's say what the next candle does. Ooh, see that? If your stop was right at okay, let's go back. If your stop was right at this wick, you got stopped out by the spread. And I know a lot of people, you send me charts on my group, that's fine because I can zoom in the charts. When people send me charts on Instagram, man, you can't zoom in on the chart. Sometimes people send me charts, hey bro, what you think about this setup? And I can't even zoom in and I just say, yeah, it looks good because I can't zoom in. So now a lot of times you get stopped out because your stops are right above the candle. You need to have stops above a couple pips of the candle because when price is coming up over here, it has spread as well, and the spread might take you out. But now you're still in the trade. And now when this candle is closed below support, the next candle has a higher probability to continue moving down. Now you see we're making lower highs, lower lows, and the next one comes down to the support. If it comes down to support, we all know at this time we should be taking profits or securing positions. And we have like a rejection here. And that's very normal, we have a rejection. So I think this was a very good example of consolidation here, but you just had to wait, like look at this. It started from, where's my eraser here? It started from right over here, right here, right? Price came up, can't take a buy because stop is going to be too big, plus resistance is right there, can't take a sell either. But if you're a new trader, you'd be like, oh man, no, this is going to go up. Look at the volume in this thing over here. We're going to break resistance. I'm going to take a buy. You take a buy, price comes over here. You're like, okay, we're still bullish. We're going to go up. Price closes bearish. You're still in a buy. You're like, no, this is going to go up. But you don't see. You think at this point, you think price is going to go up. But what you don't see is that we're creating resistance, right? The difference between thinking what you trade and seeing what you trade. Big difference, man. So the next candle closes bearish and you're in the buy, you're like, oh man, this is going to go down. I'm going to close them. So you close your buys and you take sells. You're like, all right, it's going to go down. And once this candle forms bullish, you're like, oh, god damn, Jesus. I think we're going to go up now at this point. This candle forms, you're 100% sure it's going to go back up now. So you took a buy, you took a loss in the buy, you took a sell, you took a loss in the sell, and now you've taken another buy because you're like, man, this is going to go up. Look at the volume in this thing, but still at resistance. Next candle forms bearish. You're like, boom, man, what the hell? I thought this thing was going to go up, but it came down. Now you've taken a third loss. 3 losses in consolidation. I think the only loss you should have taken was this right here, one loss. One loss and then waiting for either support to break or resistance to break. But while you're in these trades, you're like, oh man, okay, perfect. Bullish candle, we're going back up, homie. We're going to go back up now. And then bearish, boom, 4th loss. Now you're tired, exhausted. Your account is like, bro, please stop it. Please just end this. But for traders who are waiting, they're waiting for this. They're like, okay, perfect. This looks awesome. We took one loss. We waited 2 hours. Now this is our time to shine. You place the stops above the candles, price form, lower highs, lower lows. You're like, okay, perfect trade moving. Price comes down to support. We're going to close our positions because logically, this is a support, and logically, when you have support, price bounces. Price comes down, they take profits. People who are still in sells, they're holding sells. I don't know why, man. They're holding sells. They're like, no, we're going to break support. But once you see price reaching zones, it's most logical to just close it out. And at this point, I think you can still enter, maybe you can enter another one right over here as this candle starts to break the low, or, you can enter right here with keeping the stops up over here. But the most important thing is price action, right? And price then starts to continue moving down. So someone might see this as a rejection to take a buy, and then they got stopped out again. So, this candle, we can't predict this candle moving down. It just happens. It is what it is. Sometimes, price just does what it wants. It is what it is, man. All right. So this was it. So this was the lax example here. The things we covered were uptrends, downtrends, identifying uptrends, downtrends. Talked a little bit about fake outs, impulse entries. Talked about consolidation retests. We talked about consolidation and then no retests, impulse entries as well. What we're going to do now is I'm going to take like a 5-minute break. I'm going to get some water, come back, and then we're going to start off with a simulation session here. So we're all going to get together and choose like a random date, and then we're going to do our simulation on that.